Right, Standard Bank's earnings have more than doubled in 6 months. This thanks to increased activity and lower credit impairment charges. Standard Bank says its interim results reflect a recovery in client activity and improved outlook, also strong momentum in underlying business. Now, the bank, which is Africa's biggest lender by assets, says first-half earnings grew 52%. It's mainly because of a drop-off in bad debt charges experienced by all other banks at the peak of the pandemic. Standard's debt charges dropping by 49%. The bank is able to declare a dividend of 360 cents. Now, Standard Bank CEO Tshabalala joins me to unpack some of those results. Thanks very much indeed for talking to us. I mean, there's been strong recovery in client activity, lower interest rates in the period also helping. But like other banks, you did come off a low base, didn't you?
Devan, no. So I'll disagree slightly with you. First of all, thank you very much for having me. And you'll forgive the levity. You're wearing blue today, and clearly you're a Standard Bank customer. And you're going to have to explain that to our esteemed competitors at some point. But
take the opportunity.
No, so Devan, we had bad debts, a bad debt charge, which was in relative terms lower than our competitors' last reporting period. Our approach was what you see is what you get. So we did not kitchen sink. So that's the first proposition. And secondly, the base is therefore different. So the impact then of the reversal of bad debts is less in our hands than it is for our competitors. What drove our earnings was balance sheet growth, particularly lending to households, home loans, vehicle and asset finance, and unsecured lending. Secondly, we saw a recovery in activity. So we saw more volume growth in digitization transactions, in card swipes, people making payments, and we saw more wholesale activity by large corporates. Thirdly, we saw a massive improvement in our franchise, the number of our clients. We saw a decline, however, in net interest income. We saw a flat non-funded revenues, and then we had a 50% decline in our credit charge. But in relative terms, it was not as big when you compare us to our competitors. Thank you, Devan.
Yeah, you still see this economy, and I suppose everything you mentioned is reflecting an economy that's improving. You see the economy growing by 4% this year. It's interesting you say that the unrest won't drastically affect economic growth for the country, but you did caution about the dent to investor confidence. So you are concerned about that, aren't you?
We are indeed, Devan. So just to be very clear, when the unrest happened, you saw a weakening of the rand, you saw a widening of credit default swap spreads, and you also saw a gapping or a widening of the yield on government debt. And you saw a worsening then in the all-share index. So all of those things happened. But since the events in July, since you saw law and order being restored, you saw the authorities being very clear on the rule of law, and you saw South Africans responding positively to doing the right thing, broadly, those indices have reverted to the mean. So they reverted to where they were just before the riots. However, the damage caused by that is permanent. We had predicted and we had calculated that GDP growth in South Africa this year would be 4.6%. Pursuant to the riots, we think it will be 4%. Now that is permanently lost productive capacity, which is tragic. We do think, though, that in the long term, as companies continue to retool, as we fix our ports, as Eskom improves, as the spectrum gets released, in other words, as the structural reforms get implemented, we'll get back to higher trend growth than prior to the pandemic.
Some Standard Bank set to open in-store branches inside Pick n Pays. Now, you already done your first one. I think it's in the Western Cape in Richmond. What will you get out of making yourself available inside supermarkets?
Devan, we have been speaking about the importance of partnering with society, with clients, with government, and so forth. And this is just one example of a partnership where it is a win-win arrangement, and it's a partnership which will also involve competitors. Time, for example, has got a relationship with Pick n Pay. We're quite relaxed with the continued existence of Time. We're happy to live cheap by jowl with them. We have used the analogy of a mall. We're building our own malls where we're quite happy to have competitors operating inside our mall with their shops inside our mall, and we're quite comfortable doing the same in other people's malls, to use that analogy. Pick n Pay and Standard Bank have had a relationship that has lasted over 100 years, particularly with the Ackerman family, and we're very proud of that relationship. And this is just the next phase of that maturing relationship. So the partnership is fantastic. We will be opening stores inside branches of Pick n Pay. They will be manned by Standard Bank staff, and this will be in the best interests of our customers. It will improve convenience for them, reduce the cost of product and service delivery for them, and will also be good for Pick n Pay. All in all, win-win-win for all three parties involved.
All right, because of time is against us, so we're going to have to leave it there. But thanks indeed, Standard Bank CEO Tshabalala there.